Let's be honest. Every time you see the word ETF next to XRP, your brain probably flashes green candles, double digits, institutional money, the long-awaited breakout. And you're not alone. Analysts have called for 10 times, even 100 times runs. The narrative sounds perfect. Once XRP ETFs launch, price will explode. But here's the uncomfortable truth. 5 ETFs are already live. Billions have moved, and yet XRP is still stuck around $2. So what happened? Why didn't the hype translate into price? And what does that actually tell us about where XRP really stands today? When the ETF headlines hit, the market did what it always does. It started dreaming. Institutions are coming. Liquidity is coming. Utility is next. But right now, what's coming is a hard dose of reality. Even with 5 ETFs trading, XRP hasn't broken its ceiling. The crypto market's slowdown has dragged everything down, and XRP isn't immune. The truth is, ETF excitement created a spotlight, not a rally. It raised expectations faster than fundamentals could catch up. And that's why this is such a critical turning point, because it forces investors to ask the one question they've been avoiding. What really drives value? Hype or usage? In a recent interview, Avinash Shekhar, CEO of Pi42, broke down the reality no one wants to hear. He said, yes, ETF demand can boost liquidity and improve price discovery. It can even trigger short-term profits as new investors join the party. But by itself, that's not enough to take XRP to $10, because liquidity from ETFs isn't organic liquidity. It's financial positioning, capital entering for exposure, not for use. For price to stay elevated, you need people, companies, and institutions needing XRP, not just trading it. Shekhar's point is simple. Money chasing price creates volatility. Money chasing purpose creates value. Let's zoom out. XRP was never designed to be a meme or a speculative token. It was built for movement, global payments, remittances, trade settlements. The difference between a $2 coin and a $10 coin isn't new buyers, it's new usage. And the market is finally realizing that price can't outrun purpose forever. ETF demand is like air. It fills fast, but disappears even faster if there's no structure holding it. So let's cut to the chase. Can XRP hit $10? Yes, but only if two things happen together. First, ETF inflows must keep rising. Deep liquidity, steady volume, consistent participation. That's the financial layer. Second, XRP's real-world utility must expand. Banks using it for FX, fintechs moving remittances through it, corporations settling trades with it. That's the functional layer. When both layers lock in, price doesn't just jump, it re-rates. The market starts treating XRP as infrastructure, not a trade. That's when $10 isn't fantasy anymore, it's math. But until that happens, ETF hype is a double-edged sword. Because what goes up on headlines falls twice as fast on silence. If ETF inflows slow, if the macro tightens, if sentiment fades, XRP will feel the hit. And without strong fundamentals underneath, those drops come hard. Shekhar warned exactly this. Relying on ETF hype without functional growth increases the risk of sudden reversals. The crypto market's short-term memory works both ways. It pumps on excitement and dumps on boredom. So the only real hedge? Build real adoption before the crowd remembers something else exists. That's why I've been paying attention to what Unic is building lately. Because while ETF funds chase exposure, Unic is creating real usage. Their OTC and pre-market systems aren't about speculation. They're about access. Users can trade early tokens, create liquidity before listings, and interact with assets that actually flow across ecosystems. In other words, Unic is quietly fixing the problem everyone's ignoring. While traditional finance tries to wrap crypto into ETFs, Unic is pushing liquidity back on chain. That's where sustainable value starts. A lot of traders misunderstood what price discovery really means when it comes to ETFs. They think discovery equals breakout. But in professional markets, discovery means clarity, not chaos. When ETFs go live, they create a transparent pricing layer that helps large investors track volatility, spreads, and order flow. It's a mirror, not a magnet. It doesn't pull price up. It shows where price should be based on liquidity and demand. So the fact that XRP's ETF era hasn't sparked fireworks yet? That's actually healthy. It means the market is behaving rationally. Data before drama. And if XRP truly has underlying demand building behind the scenes, this quiet stability is exactly what institutions want to see before they scale in. Remember, maturity always looks boring before it looks profitable. There's one more factor most investors overlook: global corridors. While the ETF conversation dominates headlines, Ripple and its partners have been slowly expanding in regions where financial infrastructure still struggles: Asia, Latin America, and the Middle East. Those corridors don't make noise on X or Reddit, but they move volume. Every new partnership, every new on-ramp adds to the transactional backbone XRP needs. That's the silent accumulation phase, not in wallets, but in use cases. By the time those rails connect into ETFs and institutional systems, price won't just pump, it'll reprioritize. Because once value starts flowing through XRP instead of just around it, the market will finally stop asking if XRP can hit $10 and start asking how soon. Every cycle, you see two kinds of XRP investors: those who believe the price will rise and those who understand why it eventually will. Belief reacts to headlines, ETF launches, partnerships, hype posts. Understanding study structure, adoption metrics, liquidity data, institutional access. Belief buys noise. Understanding accumulates silence. And right now, the silence is louder than it looks. Behind the flat chart, XRP is entering a phase that long-term players recognize: the transition from speculation to infrastructure. It's not emotional, it's inevitable. And when that shift finishes, most retail won't even notice until the price already reflects it. That's also where Unic's strategy feels refreshing. Instead of waiting for institutions to validate the next phase, they're letting the community be the liquidity source directly. Their model rewards participation, not prediction. It brings back the original crypto idea: users as market makers, not spectators. And that's what makes the Unic ecosystem more than just another trading platform. It's a bridge between freedom and function. While ETFs bring crypto to Wall Street, Unic brings Wall Street's mechanics back to crypto. So here's the bottom line: XRP's future doesn't depend on headlines. It depends on habits: who uses it, who builds on it, and who moves money through it. ETF inflows can start a spark, but only utility can keep the fire alive. Until those two collide, price will move, but it won't transform. So if you're here for the long game, stop chasing hype and start studying structure. Because when the day comes that XRP becomes needed, not just traded, that's when the charts won't need to scream. They'll just speak. This is WealthyWise. Stay patient, stay informed, stay early.